Hi and welcome back. In today's video, we're going to be talking about cooperative banks. So let's get started. As if not to make things more confusing, there are more types of banks than just credit unions and retail banks. So we're going to be talking about cooperative banks, which also sometimes are called mutual savings banks or community banks. Again, all the same thing. And just so you know that these type of banks don't always have to be banks, they could also be trusts. Confusing, but let's keep talking about it. In some countries, cooperative banks is essentially the same as a credit union, and in the United States, there are a lot of similarities between the two, but there are some slight differences. But for the most part, Americans just say credit union and don't acknowledge that there is in fact a different type of bank. So let's talk similarities between a credit union and then a cooperative bank. So they both have the member-owner deal in which their members are also partial owners of that bank, and therefore they are assumed to be more willing to work with their customers because their customers are in fact their owners. Both also have membership criteria and guidelines in order to be a part of that bank, which is different than a retail bank. You can just go to one and open up an account, and you don't necessarily have to meet any guidelines. And the other similarity is that both have a voting policy across their members in which they get to vote on how things are being distributed and redistributed amongst company funds. How are they different? Well, credit unions are non-profit organizations. It's the way that they are structured, and that makes them different because they are overseen by a different regulatory body. Interested in finding out more? You can check out the video on credit unions. Cooperative banks, on the other hand, are overseen by the same regulatory parties as regular banks, with the exception of the Federal Reserve. So they also have state chartered and federal chartered savings banks, mutuals, trusts, etc. But again, it's different because they're not treated as a non-for-profit organization, even though they kind of operate like one. Now, historically, cooperative banking was mostly used in rural areas, more tied to the agricultural sector, where they dealt mostly with farmers. Credit unions, on the other hand, were historically more geared towards people who were employed in certain sectors, and therefore their needs were generally different than the needs of a farmer. So that's kind of why there was like a little split between credit unions and cooperative banking. Which one is older? So the oldest mutual savings bank, which is the same as a cooperative bank, opened in 1816, and it was called the Provident Institution for Savings. Now, the oldest credit union was opened in 1908, and it was called the St. Mary's Bank Credit Union. So what are the pros and cons to a cooperative bank? First pro is they have deposit security, which just means that they are usually FDIC members and therefore are backed by FDIC insurance. Community focus. So many savings banks, community banks, cooperative banks, etc. have a community focus, and they work really hard on doing and supporting local businesses within their geographic area. Financial education. Another thing with these types of banks is that they tend to spend a lot of money in providing programs and having information available to their members in order to help boost their ability to make smart financial decisions. Now, some cons of using a community bank is that it has a very limited geographical reach. Generally, these community banks are located in one or two states, and sometimes they don't have access to shared branching. Limited services. So some community banks don't have a large enough amount of people to offer services, and that could just simply be because these services may not be of interest to their current members, or they don't see a need to be offering these type of things. They also tend to have less sophisticated online websites, as well as a less than stellar user experience in terms of their online banking programs. But again, this is also tied to the fact that they don't have as much money as other larger banks to then redistribute and pay for these type of services to be extended to their members. Sometimes for them, it just makes more sense to be able to offer better loan products than a user experience. But when you have the in-store location, their customer service is so fantastic that you're totally willing to ignore how their online website looks. The last con is that saving banks tend to be a part of smaller ATM networks simply because it costs cost them money to be a part of an ATM network. And so they may not have surcharge-free ATMs in all 50 states or offerings for things that are abroad instead of just within the United States. I hope this video gave you some general information around cooperative banks. Sometimes they're called trusts. A lot of times you'll still see them called savings bank or community bank. Those are still relatively the same under that umbrella. And next week we will be talking about online banks. So if you have any questions, drop it down below. If you just want to say hi, cool, I'll say hi to you back. And as always, just happy to be here, happy to help, and I'll see you in the next one. Bye.